Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending September 23rd, 2022. Thank you all for tuning in and subscribing to this channel as well as to our podcast InvestTalk. And don't forget to like and once again, subscribe. Now, this week I'm going to title the video, Markets Send a Signal. Who is listening? And that's the big question here. Is the Fed listening yet? We shall see. But there are some signs that the market thinks the Fed will be listening very shortly, but I'll get into that. I want to go over the economic data this week. Obviously, very housing focused, and the slowdown in the economy is definitely housing focused. And this is the U.S. housing market index. This is looking at various factors, home builders, sentiment, et cetera. And obviously that hit a new, not COVID low, that was pretty bad, but the lowest level really we've seen since 2014, outside of that brief period where the whole world shut down. So that was of note. But the real data was on the housing starts and building permits. So housing starts were actually up 12%. So you go, why would home builders be upping their production of homes or starting of homes? And I think it's pretty clear. Hey, they want to get through they own land, and they probably purchase contracts for a lot of products, a lot of raw materials, and they want to get that moving as soon as possible. But if you look at permits, that's actually down 10% month over month. And that is now, let's see, 1, 2, 3, 4 out of the last 5 months, it's been in decline. And so I think that's something that will continue. I think they already, a lot of home builders on their earnings calls have already talked about how they're canceling contracts to buy land to build homes. And I think that's only going to continue. Now, existing home sales, that came out on Wednesday, month over month, another decline, but definitely slowed, right? You have 1, 2, 3, 4, 5, 6, 7th month in a row, but this is the best month of those 7 because it was almost flat, right? You're talking about 4.82 to 4.8. So things are got a little bit better, but remember, this is August. And these are contracts that were actually put in place more like June and July and closed in August. So, and remember, June and July was a bit of dip in the mortgage rate. And so I think that's really what you're reflecting here. This is certainly going to reaccelerate to the downside with where mortgage rates are right now. So just want to highlight that, but give you that bit of context. Now, the unemployment rate that continued, or continuous claims for unemployment that continued, actually ticked down a bit. So, this is the labor market still remains relatively strong. Okay, so all that being said, this was Fed week, and the Fed raised rates as expected, 75 basis points, and hinted at basically 75 again in November and then 75 again in December, which was more than what had been expected. So you can see that here going into this week, it was about a 60% chance that it was going to be between 375 and 400, which basically, right, we're at 300 to 325 now at that after that 75 basis point hike. So the odds of a 75 basis point hike in November went from 60 all the way to 73. So obviously hawkish there. Then December, let's go there. December, that was at 40, right? They said at the end of the year they'd be at 4.4 on average. And before the meeting, or late last week, that was at 41%, and now it's up to 70. So that's kind of what the market is now pricing in. So that is priced in. But what's interesting is not that. What's interesting is February, okay? Was February. And so if you look here, and okay, so this is this started to dip just a bit, and a week ago this was 41% chance it'd be all at 425 to 450. don't know why I did that. There you go. And now it's down to 23 and up a little bit here in the first quarter. So, continuing path to a tightening monetary policy. Now we're at basically 75, and then a 25 basis point increase in February. But that's still TBD. So that's where the shift in expectation and why this was a hawkish hike. 75 basis points, even though it wasn't 100, it was still very strong rhetoric. Now, this is something I did want to highlight, the 10-year 3-month. Everyone talks about the 2-year and 10-year. It's really the 3-month and the 10-year. It's that short-term lending costs versus the longer-term amount that banks can lend at. And so that remains positive, and so that is definitely a good thing. Another something I'm watching is Bitcoin. Bitcoin's been leading the equity markets. Okay, you saw this top out back in really early, the fall of 2021, and that was a precursor to the equity drop off. But what's interesting here is we're retesting the June lows. You can see this here. June, we got a low. We got a little bit of bounce. It was a pretty weak bounce, but we're not breaking this level. So if we still stay in the high teens for Bitcoin, it's telling me that I don't think this market's really going to break much lower, and we'll pivot over there right now. Let's go to that. Here is the S&P, and this is we have a cycle low here, most likely in the back half of September, early October. Now, do we go down further from here? That's certainly possible, but we're getting a retest of those lows. Should not really shock anyone. You had pretty good capitulation volume today. There's the S&P. Or SPX, the index. Here's SPY. You see pretty high volume today. Closed well off the lows, which was certainly a nice, at least short-term bullish sign, and would not shock me to see us kind of rally into year-end. Now, is that going to be a strong rally or a weak rally? We shall see. But I think the market's going to, probably find some footing here over the next couple of weeks. You saw the Russell also kind of puke lower. We kind of needed this. We kind of needed this puke lower to get people positioned the other way. I think we had record. What was it? I know I saw the article. There it is. It is saying basically spook traders piled into stock protection at a record rate. Okay, so overall volume of put options surged to the highest level ever. So that just tells you that there's a lot of capitulation in the market. Everyone chasing, running for protection. Now the VIX spiked up. It didn't go to new highs, but to me, it's kind of a positive, the fact that it's not breaking out to new highs. But you're getting kind of a near-term capitulation move, which I think is indicative of at least a near-term market low. Now here's the dollar. The dollar surge. That was really the thing that hurt the market the most today, because that fed into energy, which had been a very strong performer, had a strong sell-off, and it just shows you that everyone was selling everything, and energy was the highest weight probably for a lot of people or a lot of portfolios, because most other stuff has gone down and energies continue to go up. And so when everything kind of pukes lower, you get those leaders oftentimes having a strong pullback. And I think that's what you saw today. And to me, this is a good buying opportunity in the space, because I do think commodities still will continue higher. And you can see that here. This is DBC. So the commodity tracking fund definitely had a dip, but not a major breakdown in any sense of the word. Here's the weekly chart. Certainly, a pullback, but nothing too major on that front. Copper as well, Dr. Copper they call it, right? That had a pullback, but not breaking the lows either. So I thought that was of note, that the fact that while commodities were weak, especially the commodity stocks, actual commodities were really not that weak, considering the strong dollar. Strong dollar means these commodities should be getting pummeled. And they still remain in an uptrend, even though this last week was not great for them. Another interesting under the hood type of thing. Look at emerging market bonds. These should be taking a shellacking with the strong dollar and higher rates, and they didn't break to new lows. that's something that is of note as well. Now, gold, that was holding up fairly well through most of the week and had a pretty nice sell-off today. Nothing, too major, just within this broader pullback. Here's the monthly. Zoom out to the monthly chart, and you really hit the 50, the 50-month moving average, and that should be major support. We'll see how we close the month. That's going to be vital. But as the market sells off and there is more financial constraints, that's going to start to really pressure the Fed to pause by year end, and I think that's very likely. Now, underneath the hood, I looked at XLE, but let's look at XLI, the industrial space. That one also hit the 50-week month moving average, as well as actually made a little bit lower low here, but pretty good volume. So I think that is at a pretty good buy point, as well as the financials, and they all closed kind of well off the lows, kind of what we call a bottoming tail. Now you need to see follow through to the upside. But in a close above today's high, that would be a confirmation that this is at least a near-term bottom. But we're not there yet. We'll see how we close next week. What else? Let's look at GDX. GDX also had very capitulative type volume today and closed off the low. So I'll be watching that to see if we get a reversal next week, and I think that is also likely because I do expect a precious metal bottom as the Fed pivots into year end. I think that's it. It was definitely a bloody week, but shouldn't shock anyone. The Fed is trying to create pain, and they're doing a good job of it, but they also don't want to bankrupt the government either. That's their number one job, is to make sure the government can stay solvent. And with the cost of the debt currently and the size of the debt, we're talking about $1 trillion annually in just interest costs. That becomes an issue. And so I don't see them, being too much more aggressive than they've already been. And we're likely to see strong moderation in prices, CPI, PPI, prices paid index on the PMIs. All of those are likely to come down strongly in the month of September, and that will give the Fed firepower to pivot. It's just a matter of when will that the market start to realize it, and I think we're getting very close to that moment. So thank you all for tuning in. I hope you have a wonderful weekend. Appreciate you all, and a reminder that the contents of this video are provided for educational purposes only, should not be construed as a recommendation to buy or sell a security or to participate in an investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a good night.